Today we're going to talk about the Trump-Harris tax proposals in their presidential campaign for 2024. And we're going to start off with just a foundational section. And in this section, I'm going to just basically talk about how tax laws are made and what's really going on. I think it's important for you to understand that so you can put what they're proposing into perspective. But the video will be broken into sections, so you can skip over the parts you don't want to listen to. If you don't want to listen to this part, it's up to you, but I think it's really a good idea to listen to it so you can put in perspective all the things that are going on. So anyway, with that, we'll go ahead. My name is Maurice Kempner. I'm an attorney, real estate broker, business consultant, and coach, and welcome to True Legacy Wealth Media. Now, what I'm going to talk about in this introductory part is there's really four kind of things that go on here. One is that when all these laws are made, not just tax laws, as power shifts back and forth between elites who run our country and in Congress, they reward and punish their friends and enemies. That's what happens. And so these tax laws are moved all around all the time, and adjustments are made constantly in this way. And they also do what they're getting paid to do by their donors, and that's a big one. This is just what happens with all laws, and there's a lot of pressure in Congress for everything to be cost neutral, what they call cost neutral. So if they lower taxes in another area, they got to cut some other program or cut taxes to somebody else in another place. And this goes on all the time. So they're really kind of just shifting things around here in an attempt to stay cost neutral. They're not always effective at that. So that has a lot to do with what tax laws are passed. The second thing to know is that when they do actually pass some tax law, who knows what's going to happen? I mean, surprising things happen all the time. So if you remember George Bush Sr., he said, "Read my lips, no new taxes." But then when he got in there, he did pass taxes. He did sign tax laws. And then when they questioned about it, you remember he was jogging by and they said, "Well, you said read my lips," and he said, "Read my hips," right? People thought that was kind of arrogant. I know I was angry when he did it. I think it cost him the next election. But one of the things that happened is they put these luxury taxes on cars and yachts and things like that. And it didn't have the effect that they thought it was going to have. They just analyzed, so, well, we'll get all this extra money or whatever. But what happened is people stopped buying these things. People were losing their jobs at dealerships. Sales were crashing. People were being laid off. There were yacht companies, I remember watching in the news, who made these little custom yachts for wealthy people. They've been in business for over 100 years, and they went out of business because everybody stopped buying yachts. It was a disaster. And both parties knew it when it happened, and so they repealed it. See? So that didn't turn out the way they expected. Another example is John F. Kennedy. When he was president, he cut taxes dramatically, and everybody was all worried about it. They said, "Oh, this is going to be bad. It's going to screw the budget, whatever." What actually happened in reality is revenues to the government went up. It's just an economic fact that when you raise taxes beyond a certain point, even though you've raised the taxes, revenues begin to fall. And this is one of the things I think many people learned at this time because of all the things it does to kill incentive and so on. And so these are just a couple of examples of things that can happen. So even if they pass some of these laws they're talking about in the campaign, the takeaway here is who knows what will happen, and they may reverse them anyway if it turns into a disaster. The other thing I want to say is neither plan is very likely to be passed in full, even if at all. Now, a good example of this is the tax plan that was passed during Trump administration by Paul Ryan and his cronies in the House. Now, they call it the Trump tax cut, but you call it whatever you want. It wasn't that much of a tax cut for a lot of people. It was a tax increase for many others. But the big thing here is it wasn't anything like the tax ideas that Trump campaigned on. It wasn't anything like what he proposed. Now, one of the things that he wanted to do is get rid of this, what's called a carried interest deduction. It's hedge fund managers basically are getting, and a lot of wealthy people are getting paid money that they're earning as though it was a long-term capital gain instead of earned income tax at an ordinary rate. Now, he wanted to get rid of this, see? but he wasn't able to do it. The House and the Senate, even though they were dominant Republican, they wouldn't do that. That was part of his tax plan to help pay for all the other tax cuts that he wanted to give people. And the tax cuts were really substantial for people with, especially families and everything. You'd be making like $70,000, $80,000 a year and pay no income taxes if you had certain numbers of kids and so on. And so it was a pretty good plan, but that was one of the ways he was going to pay for it. And as soon as this hit the House and all the arguing started, the money came in and prevented that loophole from being taken away. Now, what's interesting is why the Democrats didn't make a big deal about this. Now, this is not a political channel, and I'm not taking one side or the other here. I'm just telling you how things work. So what happened was the Democrats didn't hear a peep out of them over this, right? The reason for that is because President Obama tried to do the same thing. And for many years, Democrats would point to this loophole and say it was all the Republicans' fault. But as soon as they got the House, the Senate, and Obama was president, Obama wanted to get rid of this. That's to his credit, and they wouldn't do it. The money poured in, and they didn't get rid of this loophole for these billionaires and multimillionaires. They just didn't do it. This is what happens a lot. So a lot of these proposals will end up getting in there, and then the money comes in and changes everything. So you just have to be aware that this is going to happen, and that's why things don't get passed in full. Now, I'll just give you one other little example. It's one of my favorite ones of this principle. If you don't want to listen to it, just go ahead to the next section. But I think it's a good story. Around 2008, when all these banks started failing and we had this upheaval, and Bernie Madoff at the same time was out there ripping people off, and he got caught around this time. I remember watching on the news, there was this guy who'd just been a janitor all of his life, didn't make a lot of money. He just didn't understand money that well. So what he did, though, is he saved money. He put money away in his IndyMac bank account, savings account, to save for retirement. And now he's up there to his retirement age, just about, and he's got $250,000 saved. Well, at the time, the FDIC only insured up to $100,000. IndyMac went out of business, and he lost $150,000. Now, his remedy in the tax code is he can take $3,000 a year for 20 years or until he dies of that money that he lost and deduct it against his other income. And his tax bracket was low anyway, so it hardly made any difference at all. That's what he got. Now, there's a little more to this law, but I'm just giving you the basics, and that's it. It really had no way to recover his loss, right? But at the same time, around this same time, all these extremely rich people that had got ripped off by Bernie Madoff. I remember going in every year as a tax professional. You go into these seminars and they give you the update, and they were all laughing about it, calling it the Bernie Madoff law. But basically it said, if you were the victim of a Ponzi scheme between this time and this time, and you lost all this money, blah, 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 you can deduct all your losses all at once. So what these people did is they just lobbied Congress, got a special law passed where they could deduct all of their Bernie Madoff losses all at once. And here's this little janitor. He doesn't get to do that. They're not looking out for you. They're looking out for the people who have the money, and when they can influence things. And when the laws get in there, this is what I'm saying, whatever law it is that anybody's proposing, it's always going to be affected by these influencers, whatever you want to call them, who have financial means to lobby and to have this kind of relationship with Congress. Now, the fourth thing I want to mention is that nasty stuff starts at higher income levels and has a way to move down. So I'm going to give you some examples of this, and then we'll be done with the foundation section. The way they sold the income tax when they first passed is the brackets were between 1 and 7%. That's what they told everybody. It's only going to be 1 to 7%, and it's only going to affect the top 1% of income earners in the United States. So everybody's like, well, gee, that's not any big deal, and 99% of the people aren't going to be affected. Why should they care, right? And you see what the income tax is now. It's been up over 90% at times. That's how it happens. They get the law in there, and then it just goes down and consumes more and more. Another example of this was Social Security. When it started, it was 3%. It was 3% of your earnings. It's 15.3% now, right? If you have a job, your employer pays half and you pay half, but if you're self-employed or have your business, you pay the whole 15.3%. Another thing that happened at the time of Social Security is a lot of people objected to it, and they said, well, if they give a number, a Social Security number to everybody, we're going to have to sit here and put up with this ID number that can be used for anything. It's just a number where everybody, including the government, can keep track of us and everything we do. And they said, oh, no, no, we promise your Social Security number will only be used for Social Security. You can't get a loan, you can't get into college, you try to get medical treatment, all these things. Everything requires a Social Security number now. I mean, the Social Security number, if you were to look at it and say, what percent of the time is it used for Social Security and what percent for everything else, I don't think Social Security would be much of a percentage that number is used for. So everything they promised wouldn't happen. Another example is the alternative minimum tax. Back in the 60s, I think it was some journalist, he found that these certain millionaires were making all this money, but because of all their deductions and stuff, they weren't paying any income tax. So he put this article out, and everybody got upset about it, and so they passed this law called the alternative minimum tax. In this law, everybody thought, well, this is just for these billionaire geezers who make all this money and don't pay any taxes, right? Well, now, in this last tax bill that was passed in 2018, they moved up the limits. But before that, it was to the point where over half, I think it was well over half of people in the United States that filed income tax returns were paying alternative minimum tax. So they started it out that way, and everybody was like, hallelujah, get these guys. And what the tax law said, the alternative minimum tax, it basically says that no matter what certain deductions are, you have to pay a minimum tax. And they just applied certain deductions that could be limited so that everybody would pay a minimum amount of tax, right? And this is what happened. So here it is. It'll probably be back in 2025. This current law expires, and when that expires, the AMT will drop down again unless they do something between now and then. And it's not just these super rich people that are paying it any more than it's just super rich people paying income taxes. So with all that said, I just gave you a few examples so you can see how this whole system works and what's going on there. And you need to apply this foundation or this background to these tax campaign promises and debates that are going on when it comes to taxes. And any law. This applies not just to taxes, but to any law. And that's just my opinion. Reasonable minds can differ or interpret it differently, but after some almost 30 years in this business and being a tax attorney and dealing with all this and watching what's happened, I'm just telling you what I think and what I've seen. We're going to talk about the current tax law that's due to expire in 2025. When this law expires, some of these new laws that they're proposing, if they do pass them, so for example, Kamala Harris is proposing a $6,000 tax credit for kids, right? Well, if the old law goes back into effect at the end of 2025, what happens is you just get a deduction for the kids, not a credit. So what will happen? Well, the credit or other laws that they do pass, if they do pass any of these laws they're proposing, will the 2025 law that says all this stuff has to go back to what it was, will it or won't it be affected? Will these laws be affected or not by this revision back to the old law? That's a question that has to be answered. So now we're going to move on to the capital gains section. So we're going to talk about how the two candidates are dealing with capital gains. So Harris, she wants to raise, right now the maximum capital gains rate is 20%. And that's not exactly true, but because there are some other taxes you can end up paying if your income's high enough that can raise that a little bit. But for all intents and purposes, say it's 20%. If you have over $1 million of income or capital gains, I'm not sure what she's talking about, then you have to pay 28%. And I think she's saying it'll be 28% on the amount over $1 million. But who knows? Because these are just ideas and concepts they're putting out there. This stuff hasn't even been written down or codified into a law that they're proposing to be passed yet. They're just talking about stuff on the campaign. But obviously, like a lot of people in California, they bought their house a long time ago. And they're making over $1 million on their house now when they sell it. It's just crazy. And that's not the only place. And so after they make over a certain amount, this law could affect the capital gains they pay. In addition to state of California taxes in that example are just ordinary income. They don't have a capital gains tax rate. So those are some of the effects that could happen there. But most people probably wouldn't be affected by this if it turned out to be implemented the way that she wants to. Now, this big one that she's talking about on capital gains is she wants to put a tax on people who have a net worth of over $100 million or more. And the big one here is she wants to tax a 25% tax on the unrealized gains from assets. So this could be land of farmers, it could be stocks, it could be any number of things. So they bought it a long time ago or a while ago. It's gone up in value. She wants a 25% tax on that gain, even though the asset hasn't been sold yet. This is very controversial. Now, one of the things that I haven't seen anybody talk about is what happens if, let's say, you get taxed. Let's say you have a gain of $100 million or something, and they tax you $25 million on it. And you pay this $20 million. But this is a stock, and it's volatile or something like this. And now the value, you pay the tax, and you've still got the $100 million, right? And then it drops 50%. Now it's worth $50 million. Do you get a deduction for the tax you already paid? How does that work? And then let's say now it's down to 50 million, and then let's say because it's volatile, it goes up again. It goes up again to 100 million. Well, now do you got to pay? That's a 50 million increase, and then it's back up to where it was before. So now what? You got to pay another 25% on that 50 million, which would be another 12.5 million. So every time the stock goes down, or the asset, whatever it is, and you lose money on it after you've already paid taxes on it, and then it goes back up to where it was before, do you got to pay the tax again? Nobody's really answered that. And so if you have to pay these taxes when stuff is going up and down again, nobody's going to want to hold any kind of a volatile stock or asset or anything, because you can see how that's going to work out. Now, the other challenge I see with this is there's going to be kind of a spectrum of people that this law will apply to. And at one end of the spectrum are people that are going to have a lot of assets, but they don't have a lot of cash flow. And at the other end will be people who have a lot of assets and cash flow, right? The ones who don't have the cash flow, so there could be people like farmers who've had farms and their families for generations, and they have these huge gains on the value of the land because it's gone up so much, especially land that's outlying around cities and areas like that where the cities are expanding into this land, and so this land has gone up a lot and everything. And these farmers, they don't have the cash flow growing crops to pay, so they're going to have to sell these assets to pay the tax, right? Their farms are going to go down in size, they're going to lose these assets, they're going to pay taxes on it. What I think will happen then is the people at the other end of the spectrum who have cash flow, some of these big tech company owners and hedge funds, different things like that, what they're going to do is they're going to pay the tax, and then they're going to buy up these assets from the people who can't. And so what's going to happen is there'll be fewer people at the top holding assets. In other words, it's another concentration of wealth is what I see happening. There's other issues on IPOs and things, how those will be affected. That's kind of what I was talking about earlier, where all of a sudden the price goes up and then it goes down. And how do you even figure out when you're going to tax if the price goes up and down during the year? This could have some trickle-down effects in the way it affects businesses, that certain businesses might do things to protect themselves, to lower certain costs by laying off a lot of people and things like that, so they can pay these taxes to keep certain assets. That's possible. But like I said before, this is one of those laws where we really don't know what would happen if they did it. It's like the Bush tax, luxury tax, and Kennedy's tax cuts that I talked about in the foundation section, right? That people were surprised by what happened. And there might be a lot of surprises, and I think there would be if this law was actually realized in any way, shape, or form. But one of the big takeaways on this law is that all this money, whatever they do collect, it's going to be taken out of the private sector and put in the hands of government. I don't know. Who do you think? I mean, and reasonable minds can differ on this, but who do you think is going to be, how do you think the economy will benefit the most? Which way do you think people in general will benefit the most? By having this money in the hands of businesses and entrepreneurs, even if they're rich or whatever, and they're using it for certain things, or putting it in the hands of government? Opinions can differ, but that's what will happen under this, it'll just be another shift of revenue there, plus the other chaos that I mentioned. So it's a very controversial law. I doubt that it would pass, but if it did, those are some of the issues that would be talked about. Now, what she wants to do with this extra revenue, since this is like I said before, they try to make things cost neutral. This is in the foundation part, if you didn't watch that, is she wants to use this money to help pay for tax credits like the child tax credit and other social programs for low-income people. That's what she plans on doing with it. We all know how those programs work and how much benefit they offer to people. And it's really interesting because they do provide some benefit, but the costs are so high that a lot of times it costs more to bring somebody the benefit than the benefit people actually get. It's not a very efficient program. I'll do a video on that. If they were used correctly and people used them correctly, they could be great benefit, but we don't have a history of that actually happening. There's a lot of corruption and squandering, and so I don't really see that changing much. So I just don't know how much of it would actually end up in the hands of people who really need it. It would be nice if it did. The thought is good, but the way things work, I don't know. As far as capital gains, Trump pretty much wants to leave things the way it is, except he wants to expand this Opportunity Zone program. I mean, some people really like it. I'm not a big fan of it. I don't really care about it one way or the other. It's a way to defer capital gains if you invest in certain areas, but most of these areas I wouldn't invest in anyway. If it was me, I have my reasons for that, but a lot of people have made a lot of money doing it. And so I'm not saying it's a bad program. I just have other things that I personally like better. But this could help a lot of people. It could provide some affordable housing, for example, in certain areas if this Opportunity Zone law was extended. So that's what Trump wants to do. He wants to extend it and work on that. So when you go out and you start up a business, before your doors are open to business, and you have costs, you can't deduct those costs because you're not in business. There's no business to deduct them against. So let's say you have $10,000 in expenses. You buy machinery, you set up your office, you do all these things before you ever open the door, and you have $10,000 in costs. Right now, the law is that you can take $5,000 all at once. This number is not adjusted for inflation. A lot of these numbers just aren't. So it's ridiculous that they're not, but they're not. But anyway, you can deduct the $5,000 all at once. The other $5,000 of the $10,000, you have to amortize it in straight line depreciation over 15 years. So you get 1/15 of that remaining $5,000. So under Harris's plan, what she wants to do is raise that from $5,000 to $50,000. Now that's a pretty good deal for a small business. A lot of small businesses would be able to take a lot more of a deduction up front. Okay, Trump, he's not proposing any changes to this area. He doesn't have anything counter to that. Now we're going to move on to another section. This is the QBI 20% deduction. Now, under the current law that was passed in 2018, that will expire at the end of 2025, Trump wants to make this QBI deduction permanent. Basically what it does for these smaller businesses, you get 20% of your profit taken off the top and is not taxed. They just give you, it's like a standard deduction almost kind of thing for a small business, right? They take 20% off the top. Now, there's certain restrictions, certain professions, certain things, but that's due to expire at the end of 25, and Trump wants to extend it and make it permanent. Now, the next section, and Harris doesn't have any plans on that one way or the other, so under her, it's just due to expire. This is the next section we're going to, bonus depreciation. So, bonus depreciation, Trump wants to extend that and possibly make it permanent. Now, you get 100% bonus depreciation on like millions of dollars of stuff that you're going to purchase for your business. Now, this kind of makes up for the $50,000 startup costs that Kamala was talking about, because if you maneuver things right and you time things right, you can pretty much write off everything all at once, way beyond $50,000, just using bonus depreciation. There's ways to do it, and you can write off a lot. And I don't know what the limits would be on this bonus depreciation that Trump is proposing, but from what I understand, it would be kind of similar to what it is, and it's a big amount. So what you're able to do is write off all at once a lot of things you buy that you would normally have to depreciate that you buy for your business. You could just take it all at once if you want to. Now, there's some good reasons why you might want to do this and reasons why you might not want to do this. I'll make other videos about that. I've made a few already. But this will be a big boom for business. Now, it was 100% bonus depreciation. It's down to 60% this year, and it's due to run out at the end of 25. So he wants to put it back up to 100%, where you can take 100% of the cost all up front. The next one we're going to go to, the next section is child tax credits. Now, Harris, she wants to raise the tax child credit to $6,000 per kid. Currently, it's $2,000. Now, this is one they play with a lot. It's been gone up and down over the last few years. During COVID, they played with it a little bit. They increased it. They sent people to money on the credit early. And then it caused a lot of confusion when taxes were done. People ended up basically getting some of the refund early and then owing on their tax return. It's been kind of a playground for politicians, this child tax credit that's been going on for quite some time. The question is, will it expire at the end of 2025 and go back to where you just get a deduction? I don't know. We talked about that a little bit earlier, but that's what she wants to do. And they're $200,000 single, $400,000 married. Phase out on this credit. That's where she would phase them out. Trump, he has no plans to change the child tax credit. Tax-free income for tips. So Trump, he came up with this idea not to tax tips. Harris, shortly thereafter, decided to do the same thing. I think it's great. I don't think most tips are paid to people that are in lower income tax brackets. I mean, billionaires are not out there getting tips, right? So I think anything that gives relief to lower income people or people that are in the bottom 50% of taxpayers, I think is huge. In fact, I'll just make this on another video. I just think there should be a $100,000 standard deduction per person. And there shouldn't be any Social Security, Medicare, or income taxes on that. I'll make another video on that. And only people above that would pay any taxes. So this is kind of a move in that direction. And it's just making it so a lot of the income for people who get tips and already aren't making hundreds of thousands of dollars a year general are going to get some tax relief. So I think that's a really good thing because every dollar in those earning brackets is worth a lot more than every dollar for somebody who makes millions of dollars a year, right? There could be some challenges implementing it because people will obviously try to manipulate things to say, well, that was a tip and not regular income and whatnot. So if this were to come to pass in some way, I could potentially see a lot of shenanigans going on. It create a lot of work for the IRS. That's all right because it keeps the IRS busy so they're not bothering you or my clients, right? So anyway, I don't know what will happen with that if it's passed or how it would work out. And it might be another one of those things where people just don't foresee the outcome and they might have to change it or tweak it if it was passed. Trump is recommending that overtime pay not be taxed. But once again, I think this is a good thing because most people who make overtime are in the bottom 50, 70% of income earners. And any tax relief that can be given there, I think is a really good thing. And so this could give a lot of relief to a lot of people. So I think that's a good thing. Kamala doesn't have any proposals in that area. So the next section we're going to go to is no tax on Social Security. So this is an idea by Trump. When your wages or your business income comes in, they tax you on it, even though they take the Social Security tax. So they do the income tax on it and they take the Social Security tax, right? And then when you get it back, depending on your income or your age, you could be taxed on it again, basically, is kind of the way it works out. There's a little more to it than that, but that's basically what it is. So I think it's a good idea to get rid of the tax on Social Security. And at least on Social Security benefits, at least if you're going to tax it, have it be for somebody who makes, hundreds of thousands of dollars a year, not like it is now, where it's just a few tens of thousands of dollars of income they start taxing you on it. That's just ridiculous. So I think it's a good idea. That's just my opinion on that. Kamala Harris, what she wants to do is she's got some ideas here on this. So one is She wants to give $25,000 in money for purchase of homes up to $715,000. So I'm not sure what that means. Does that mean if you purchase a house over that amount, they start to phase out the amount they give you? Does it mean that if you purchase less than that, they don't give you the whole $25,000 credit? Who knows how this might work out? Okay, so, but that's what she wants to do. Now, one of the challenges with that is it doesn't do anything to increase housing inventory, which is the underlying problem. It just throws more money into people's hands to buy houses, which will put upward pressure on prices. That's what I see there. But we're not done with this, so we'll go on a little further. She also wants to give a $10,000 tax credit to first-time home buyers. This was done before. And there were credits given to people who are first-time home purchasers. So she wants to do that. That could be a really good thing that could help people. The same with this $25,000. But once again, it's more money being thrown at the same inventory, which just raises the price, right? You got more money chasing the same goods and services. Prices go up. Now, the other thing she wants to do is put another $40 billion towards local governments and jurisdictions to give them incentives to build houses. Now, this is a thing that could increase the inventory, that could offset some of the effects I was talking about. I remember talking to some builders around Moore Park, California, and they said there was, I think it was something like 30 different groups or whatever they had to talk to before the city would even listen to them about where they could build something in their city or not. This is what I call the AK-47 challenge. Because if you look at what happens in these third worlds, if you ever watch this movie, Lord of War, was in there. Every time Nicolas Cage goes into a lot of these different areas, there's some people there with AK-47s, and they're not going to let him through unless he pays them a bribe. So it's the same thing. Only they don't have an AK-47, but it's the same thing. That's why I call it the AK-47. So they have to go through like the Sierra Club, Greenpeace, all kinds of groups like that they have to go through. And then, of course, to get them to be on their side and make recommendations to the city they like, you got to figure there's got to be some donations involved there to kind of grease the wheels. This is before they even start building. And this was one of the reasons why we have so much trouble getting things done. It's all the red tape and bureaucracy and political things like this going on behind the scenes. Now, how would this $40 billion be used? Would it be used to reduce some of this? Well, I hope so. But generally, the way our system works, I really am sad to say this, and I don't mean to be a cynic, but it just ends up being used in ways that just make it more complicated and greases the wheels of certain people who are taking advantage of all this stuff, and ends up a lot of times in the wrong hands. But if it could be managed right, and it would actually cause these incentives to take place and increase the amount of building, that could bring great relief to the inventory problems that we're having. The other thing she wants to do is open up federal land, certain areas that could be developed where housing would be in demand. And this would be a good thing. And the feds would control that. So that might reduce some of these other issues that I was talking about, like in the Moore Park example. So Harris, she wants to raise tax rates from 21 corporate tax rates. Now we're talking about C corporations here, the big companies, those companies are typically on the open market, in the stock market, different stock markets, whatnot. She wants to raise the tax from 21 to 28%. Let me just talk to you a little bit about this, because it's not necessarily what you think. Whenever a business has an expense, let's say you're Ford Motor Company and you're building a car, right? So you got to buy tires, you got to buy paint, glass, you got to buy parts from all these other companies, things like that. Now all this stuff comes in and they add it to the cost of the car, right? And then their profit margin comes after that. The other thing they do is, like, if utilities go up, or they just add that on, right? Well, it's the same with taxes. And the cost just gets passed on to you, just like it's any other cost in to the making of that car. So taxes are just another cost. And there's all kinds of taxes. There's payroll taxes, sales taxes, property tax, all these taxes, income tax and everything else, plus these corporate taxes. So we have some of the highest corporate taxes in the world right now, and it makes our companies a lot less competitive, and it raises the cost of a lot of the goods and services that you pay for. My personal belief on this is I don't even know if corporations should pay any taxes. I think taxes should be paid by people when they get the money from the corporation. Now, if they want to make it so well, they have to distribute these profits to people and they pay taxes on them. Whatever they want to do, I just think there needs to be a different system here to keep businesses lean and not add an extra cost of doing business on, because then they can hire more people, things cost less, and so on. So there's this book that came out years ago in the 80s, showing it to you here by this guy. And one of the things he talked about in there, I remember reading it years ago when it came out, was I think the price of a car, I think he said it was around 72% of the price or 50% or whatever, are taxes that have been paid by the company and passed on to you, the consumer, when you buy the car. So when you go down and buy a car, that's the biggest cost of the making of that car, is all the taxes that have been, the various taxes that have been paid and passed on to you as a business expense. Now, look at how many more cars people could buy and afford. And of course, people who have the least amount of income would be the best off by having lower costs for everything, right? So it's just something to think about. I don't think these having really high corporate taxes is a good idea, and I'm just giving you my reasons. Reasonable minds can differ. Trump, he wants to lower the tax rate of corporations from 21 to 20%. And if it's a corporation that works in the United States and makes things in the United States, wants to lower it to 15%. That's more in line with what a lot of other countries are, the 15%, and it would make American companies a lot more competitive, I think. The other thing Trump wants to do is he wants to increase tariffs. Now, there's a lot of controversy around this. I remember when Trump was president and he wanted to raise tariffs, everybody criticized him, said, oh, it's going to start a trade war, it's going to do all these bad things, raise prices and whatnot. Now, when Biden's taken over, he's kept those tariffs, most of those tariffs against China, for example, and actually raised some of them, because they really do work. Back when the Industrial Revolution started, the British that's where it started. They were way ahead of the United States in every way. And their technology was better. They could make stuff that was better quality and cost less, ship it to the United States, and you could buy it. And it was better and cheaper than American-made goods. And it was made in England and shipped over to the United States. So the United States put on tariffs. These tariffs lasted for about 100 years. It's the number one reason why the United States became an economic superpower, because it helped American manufacturers compete with the British. It made their stuff cost less than British goods, and so people bought it because it cost less, the quality improved, everything improved until they caught up and passed the British. Now, the other reason Trump wants these tariffs is for security reasons. So, for example, when we went into COVID, about 80% of the medical supplies we got came from China. Well, that's not a good thing. If you have a medical crisis, you got to depend on a country that you have some hostile relations with to send you 80% of your medical equipment and masks and whatever else, right? And it's the same with solar right now. Solar batteries and panels and everything, most of those things are coming from China. And if we're going to switch to that kind of power, which I'll do some videos on that, where it could be a lot less expensive and better and everything, we don't want to depend on China for all of our solar panels and things. So some tariffs are necessary. Does it raise prices? Yeah, but that's offset by putting people to work in the United States making these things or doing these things instead of in other countries. So you put the tariff on, it costs a little more, but then people have more money because there's more jobs and there's more competition for workers, which raises wages and so on. So those are the theories. And once again, we'll just have to see what would happen if we do these things, because you just can't predict sometimes how these things would play out. Maybe it wouldn't work. We just have to wait and see. Now, the thing about this, it only applies to C corporations. That's it. That's basically it. The main takeaway I want to take here is that I know it's hard for people to understand this or even like it, but really, when businesses have expenses, they just add it to their costs and they pass it on to consumers, citizens, whatever, and they pay whatever that cost is. They pay the rent, they pay the supplies, they pay the labor, they pay all the costs that go into the goods or services they buy, and taxes is just another thing that businesses pass on to consumers. So just keep that in mind, in my opinion, when you consider these various tax scenarios. So now, if these things were passed, one or the other, depending on who gets elected, I think that the Trump plan would be better for small business. It would make it, because of the bonus depreciation, the QBI, making QBI permanent, those are two big things. Lowering certain on corporations, this would make the overall, and then the tariffs, I think this would be overall much better for the economy than what Kamala Harris is proposing now. Reasonable minds can differ on this. People can analyze it a different way, come up with different conclusions. This is just based on my experience and what I've seen. And like I said, I'm not being political, I'm not favoring one over the other in my analysis of this. I'm trying to be even-handed on it. When wealthy people pay income taxes, that's one of the reasons why I think taxes should just kind of be eliminated for people who make. I think they should get rid of all the different tax brackets and just everybody files their own tax return. There's no married, joint, or had a household or anything, and everybody gets a $100,000 standard deduction on all taxes, state, federal, Social Security, Medicare. And because the people who make under $100,000 are not paying that big a percentage, and that would eliminate the need for a lot of this stuff and give everybody a chance to get ahead and breathe and so on. And I think it could be easily done. And the fact that they're not doing something like this, I think it speaks volumes for who they're really helping or what this whole system is all about. Just my opinion on it. And so I hope this helps. I hope this is a good analysis that will give you kind of a rundown. And I hope from what we talked about in the foundation little section and everything, you can kind of see how to put this all into perspective. And I just wouldn't get all wrapped up in it and get all excited one way or the other like a lot of people are doing. Spend hours and hours on this, because in the end I think most of it's just going to be non-relevant, and God only knows what's going to happen or what's actually going to get passed and what will happen once it gets passed or how that'll be changed. It's just one thing we know is things will change eventually in all kinds of ways, and you just kind of have to adapt as we go along. That's my philosophy of it. And you just deal with it when it comes up, and you make your plans then. You kind of prepare for what might happen, and then go from there. So anyway, I hope that's helpful. And if you like this, I hope you'll like and subscribe to our channel. It would be very helpful to us in helping us to come up with other videos like this. Thanks for watching.